What's going on, ladies and gentlemen? Welcome back to the channel. My name is the Creative Investor, or Tyler, whatever you guys want to call me. We got the pink suit on, we got the camera back because things are getting real. So let's dive into this video. AMC was up a little bit more just a couple of minutes ago. We're starting to see a little pullback, but rest assured, I do still think this rally is on the table for this week and heading into the rest of the year due to the Santa Claus rally, tax loss harvesting, and institutional investors going away for vacation. And if you guys are unaware of what that is, let me know in the comment section. I will make another video on that, but I have made a couple on this, so you guys can check out the past videos that I made yesterday about this. But let's get into all of the information that you guys need to know. Hit that like button for me, consider subscribing to the channel. As always, check out the links in the description for the buy and sell alerts and to get free stock. You guys cannot go wrong by doing that. That is free money. So let's dive into it, guys. AMC is up 2.2% as we currently speak. We were up more, like I said just a couple of minutes ago. We did hit a high of almost $43 per share, $42.99 per share, and we traded sideways for a bit, and now we are starting to come down. There is some things that are causing this. This is not just due to AMC, retail investors selling out, or more shorting happening. I think it's just more along the lines of algorithmic trading programs. And in this video, we're really going to talk about what is going on in the overall marketplace, why just stocks in general are selling off. Like, take a look at Rivian, down 15.55%, getting absolutely demolished today. I have a put position up 137% on this, $315. Like I said, if you guys want access to all the buy and sell alerts, check that out, link down below in the description. But let's dive into more about what is happening in the overall markets, and then we'll give you guys the short interest data, the stock tracker data, and the possibility for a small gamma squeeze throughout the rest of this week. So first off, what is affecting the marketplace today? Well, keep in mind, this week is a shorter week due to Thanksgiving. We are not open on Thanksgiving, so you're going to see a lot of weird moves in the premium because instead of 5 trading days, there's only 4 trading days. So a lot of people are making moves based off of the premium. A lot of people are starting to go away on vacation because this is the week of Thanksgiving. So you're going to see a lot of different things happening. You're going to see a lot of people selling stock for losses, potentially covering on AMC short positions to offset some of those gains. But just overall, you're seeing a lot of money moving around at the current moment. But there's a lot of fears on different things that's going on, and that's what we're going to talk about right now. So China sets the stage for easy monetary policy as central bank deletes language from new report. And if you take a look down here, it says China's central bank removed several phrases from on policy restraint in a quarterly report, a move economists said may be a sign that stimulus is on its way. Now, a lot of investors are thinking to themselves, and this is pretty straightforward, if China has to give stimulus, what is going on in the overall economy over there that is needing this right now, right? We've all gave out tons of stimulus throughout the past 18 months. Why is there a need for more stimulus? Is the real estate market getting bad? Is there just a bunch of over leveraging? What is going on? And unfortunately, what happens in China tends to spill over into our markets as well, because China is the second largest economy. So hopefully that makes some sense to you guys. That is the first thing that is causing some fear today. As well as that, guys, we do have a lot of COVID lockdowns over in Europe. Austria enters a lockdown. A couple other countries as well. Alpine, Germany's considering this. Dutch lockdowns. I'm not exactly sure about that one, but just tons of rioting, tons of lockdowns due to COVID. I live here in Michigan. We're at all-time highs as well. A lot of people I know personally have it. So I'm not saying a lockdown's coming for us, but a lot of investors are leaning that way if the cases do start to go crazy again. Now, one other thing that is positively affecting the market, but definitely not overweighing those other two things, is Biden picks Jerome Powell to lead the Fed for a second term as the U.S. battles COVID and inflation. President Joe Biden announced Monday that he is renominating Jerome Powell for a second term as Federal Reserve Chair and will put forth Fed Governor Lael Brainard as Vice Chairman. The move comes after weeks of speculation that Brainard might get the nod. In In making the move, Biden praised Powell for decisive leadership during the COVID crisis. And Powell did a great job. I'm a huge fan of Powell. We would have had a lot more businesses that actually went bankrupt without Fed Jerome Powell. So big congratulations to him. I know he's not watching this video, but still, this is a good thing for the markets because we know who Jerome Powell is. We know his guideline, his policy, how he feels about inflation, raising rates, all of these other things. So that is very important, and these are really the things that are affecting the markets today. Now the markets are up quite substantially. Nasdaq coming down quite a lot since I started making this video. It was up over 0.5%, and the markets were starting to take a turn. So just watch for this, watch for the digestion of all of this. There's definitely some positive, like Fed Jerome Powell is going to remain the Fed chair. There is also a lot of negatives like COVID, lockdowns, and the fact that China has to issue more stimulus. Very, very weird. But we're heading into the times of the Santa Claus rally that is likely to bleed over into AMC and just other stocks in general. Now, let's specifically talk about AMC. We are in this tight range, literally in the middle between $40 per share and about $44 per share, which is our resistance level. $40 is our support level. So I do think we will approach this $44, $45 level. Not exactly sure if we will break out. We just have to see the volume come back into the stock, because even today, a little bit less than halfway through trading, we're only at 12 million for volume on the day. And a lot of this, I would speculate, are due to calls that are already in the money and calls that could potentially go into the money. And that's something that I called out in the last couple of videos, is that even though the Stocko tracker only has us at 129,000 for out of the money calls and about 19,000 for in the money calls, the fact is that most of this open interest is held very close to going into the money at the 42, 43, 44, 45, 46, 47, 48, 49, and the $50 strike has the highest for open interest. After that, after the $50 strike, it pretty much dies off to a couple hundred for open interest at any given expiration date. And the furthest strikes out actually does not have the highest for open interest. That is something we have not seen in a very long time. So if we do make a move to the upside, you're going to see a lot of hedging going on, and that is certainly possible, and we could see explosive moves to the upside based off of this and the low volume that we are currently seeing. Now, on top of that, let's go over the short interest data and then a couple tweets from Adam Aaron, and then I want to circle back to more of that technical analysis, really give you guys what matters, what doesn't matter. So the short interest is estimated at 15.63%, 80 million shares that are sold short. I don't think these numbers are accurate whatsoever. I think the best thing to do is go off of the exchange reported short interest data and then kind of use the price action from that point, which was October 29th. And granted, we were at about $35 per share, but it's been up and down, up and down, up and down. We've had a lot of contracts that ran into the money, so I don't think this move to the upside has actually been from shorts covering. Maybe a little bit, like I've said many times, maybe 0.5% of this 18.5% mark. So to say the short interest is at about 18%, I think is very reasonable. Now, days to cover at 2.66. That is incredible. You want to see this as high as possible because this is telling you how hard it is for shorts to get out of their short position. A lot of analysts, they discredited AMC in the short squeeze because the days to cover was so low, saying how are people holding on to the stock when the days to cover is so high. And now you can't make that argument. That's probably why you don't see financial media talking about AMC, not even really on CNBC, because the days to cover is so high and there's no argument saying the short squeeze can't happen at this current moment. So that's the scoop on that. The free flow out on loans, 17.36%. Share utilization is at 77.18%. Definitely going down, meaning there's more shares available to be sold short. Now, a couple of these tweets just to look at. We honor those who serve all year long. Generous admission discounts for those with military ID. And then one other one. Speaking of discounts, we also offer student discounts, senior 60 plus discounts, Tuesday discounts, a list to give frequent moviegoers discounts, and 30% matinee discounts. It's movie time America. And I don't think this is like game changer, but obviously, but I do think giving all these discounts does incentivize people to go to AMC theaters a little bit more. And I know older people you know, I'm sure this is relatable. I know older people, they see discounts and they want to use that discount, right? So I think it'll be good. I think it'll help drive some revenue. Nothing too crazy though. Now let's circle back to AMC Technical Analysis, what actually matters, and that's going to be the 50-day and the 100-day moving average at the current moment, which is at $39.74 per share, about 40, just call it $40 per share, where our support level is, and we're making a clean break from that. So it does look like we're going to go on this bullish trajectory yet again to the upside. Tomorrow really probably will make or break this. We could come down to this $40 level, or we could continue to go higher. If we go higher, we're pretty much out of the clear from this support level, because as you guys can see right here, we touched this right here 1, 2, 3 times, bounced off of this, and now we are making a clean break above this. So definitely a good sign to see right here. Other than that, the only thing that really matters is going to be the support and resistance levels. Like we said, $40 support level, $44, $45 resistance level, and then on top of that, the last thing that really matters is the volume, because we are seeing incredibly low volume right now. When we see the volume come back into the stock, considering we are at almost $42 per share, you're going to go absolutely parabolic. This is the time to be very excited about AMC, not in the sense of go out, buy all these calls, go YOLO crazy. It's to say, with all of these factors, the Santa Claus rally, tax loss harvesting, institutional investors going away on vacation, and the low volume, the technical breakout that we are seeing, the option activity that we are seeing, and the short interest, obviously very high, shorts have not covered. This is time to be excited and to let your morale stay a little bit higher than normal. So hit the like button for me, consider subscribing to the channel. If you guys want free stocks, check out the links in the description to do that. If you guys want access to all of my trades in real time, that is also linked down below in the description of this video. So that's gonna be all for this video. I will see you guys later on today. You guys take care.